Well, it's been an interesting month of April and now May on stock markets. Let's talk about it with our first expert guest of the program. He's Ryan Belanger, founder and managing principal at Claro Advisors. He joins us from Boston. Ryan, thanks a lot for joining us. You've said in some recent commentary that the past month of market volatility appears to be a garden variety stock market correction. So my first question to you is, what do you think of the very sharp recovery we've seen from the first week of April through to today, over the past month or so, when we have really seen North American stock markets move higher?
Yeah, nice to be with you again. I think it really was reflective on Secretary Bessent's comments that particular day where he said, it is reported that a few people corralled the president and said, the bond market's really flashing some signals here when the 10-year got to 4.5. And from that day forward, we've basically been, sharp recovery. The equity markets have recovered significantly. The bond market has calmed down a little bit as well. And I think, it was a garden variety correction. It was a great opportunity for many investors to put some cash to work that maybe they had been sitting on, or maybe fund a college savings account a little bit more, or just take advantage of what was clearly negotiating posture on part of the president, but that was uncertainty enough for the market to definitely get spooked. And I've been doing this for a long time, almost 20 years. You just don't get those opportunities very often, and so hopefully many investors got to take advantage of that. And they've been rewarded in the last couple of weeks for doing so. So
you do not believe the rally since April 8th or 9th or so is a bear market rally? You don't think this is a head fake? You think that the rally is sustainable?
I do. I mean, I think, you got to look at the data. You look at the jobless claims that came in, CPI is continuing to soften. I mean, I was not one of the people who thought we'd get a soft landing. So I've been wrong on that. The Fed appears to have kind of pulled this off. We're not there yet. There's still some work to do. And sometimes, like losing weight, those final few pounds are the toughest here. And we'll see what happens if CPI can get to their target. But I do believe that the economy is on solid footing. And although the consumer is fairly pessimistic, I mean, obviously there's going to be some things that will result from some of these activities from the administration. We will have to see if the containers are going to be showing up empty as people are reporting, and how that will affect the holiday sales. But I just firmly think that the market's generally okay. Volatility is pretty normal for the stock market. I don't believe this is a bear market. I thought that more in 2022, to be honest with you, and I feel better about things now.
You believe, as some others do, that tariffs have been a negotiating tool of Donald Trump and the U.S. administration. What do you make of the U.S.-UK trade agreement that has been announced this week? Is that a clear signal that that's what we may see with respect to other U.S. trading partners, a series of deals?
Well, I think so. I mean, they're definitely foreshadowing that to us. They're being transparent. There's a whole laundry list of countries that are waiting to get deals. I think it was smart to get the UK deal done first. They're a great partner of ours and always have been. We do have a surplus with them, so it's not as significant, but a win's a win, and obviously the market liked it, with the market being up yesterday. So I think hopefully it's a harbinger of what's to come here. We get some more trade deals and we get some more clarity. I mean, clearly the China deal is what everyone's, that is the main event. And so these are all kind of, the undercards to what is going to happen with the China deal. So we just have to wait and see. It's just very hard to predict that one.
Investors were also hopeful that the Trump administration would be an administration that deregulated certain sectors of the U.S. economy, including the financial sector. Do you believe that's coming?
I think so. I mean, he tends to, do what he says. And so we're already starting to see some of these, proposals on no tax on overtime and Social Security. And so if the president had said he would, deregulate and try to get more deals done, I think that's probably what we're going to see, especially in contrast to the previous administration. And so I think we'll see more deals. I think that would be good for the public markets. I mean, the IPO market is dried up. It's very difficult to come to the market right now. And there's just a lot of, I think there's 30,000 private companies right now. And so I think there's an appetite to IPO if we could make it a little bit easier for companies to do that.
Okay, you've got a couple of stocks, 3 stocks that you like, and we would like to talk to you about those right now. One is very much in the news because of a real passing of the guard, Berkshire Hathaway. The news this week, of course, is that Warren Buffett finally, after decades of unbelievable investor returns, has decided to retire at the end of this year. He's not gone yet, but you like Berkshire Hathaway, the B shares, which we're looking at right now on our screens.
Yeah, I do. It's a safe hedge. You know, it's a hideout stock. If things do, go poorly for the economy, it's a conglomerate. And it's very safe. It's almost a wimpy pick on my part, but it has created a lot of wealth for many investors who have stuck by him and his leadership, and so they've been well served to do that. The stock's down a little bit, obviously, since he made that announcement. So anybody that's looking for an opportunity to nibble on the shares, you're getting a little bit of a discount here. Okay,
you also like Verizon, ticker symbol VZ, as we say in Canada. You would call it VZ. It trades in New York, and it obviously is one of the big U.S. telco companies.
Yeah, I'm liking this one a little bit more these days. I mean, if we get interest rates, clearly they're going to be heading lower at some point. I'm not forecasting that anytime soon, but money markets are in the high 3s, low 4s, and so you can buy an equity of a company and get a 6.5% yield. I don't know anybody that's canceling their cell phone. I think that would probably be one of the last bills that people would try to wipe off their monthly statements. So I think it's a safe bet. I mean, clearly the cord cutting is priced into the stock, but they figured out ways to get around that and maintain the dividend. I think that's why I like the stock.
Okay, we've got time now for CVS, one of the big pharmacy operators in the U.S., and a sector that has been under pressure for a while.
Yeah, the sector's been under pressure, but this particular stock has been on fire. I mean, it's up significantly this year. And that's surprising to a lot of people. And, many people years ago thought the CVS business was in trouble given the Amazon business and the rumors that Amazon would be getting into this space. But none of that has really come to fruition. I mean, people still go out to stores and buy stuff. And I live here in Boston. There's plenty of stores that people walk into and buy things, and there's going to be a need for that always. So the stock's got a nice dividend. It's had a great year so far. So if you're a momentum player, you might like this one.
Ryan, thank you very much for your insight today. That was Ryan Belanger, founder and managing principal at Claro Advisors. He joined us from Boston. Still ahead, today's market drivers and things to watch out for next week with